Hello, and with 6 weeks into the trading year, we're going to ask ourselves, are the bears emerging from their winter hibernation? So if we look at the macroeconomic data, it's not been particularly positive. The key disappointment so far this year has been really China's PMI numbers. So we've had the second month of implied fall, and actually the latest number was quite a bit more negative than people were actually anticipating, and it's currently posting a 7th-month low, China's manufacturing PMI. The European numbers were also quite disappointing, especially France's service PMI that came in much weaker than expected. So with that in mind, what we saw is we've seen so far this year pretty big outflows out of equity ETFs. So investors are potentially looking to take money off the equity table after what's been a pretty positive year, especially last year. And another interesting trend that we've seen is the fact that short interest, which is kind of a bit of a good gauge of how bearish the market is, has been rising. It's up about 7% so far this year if we look at the average short interest across the S&P 500. So with all that in mind, we wanted to ask ourselves really, how are the markets really reacting to this and the fact that we're seeing a bit more bearishness going on in the market. So moving on to the second slide, the key takeaway from that is on the top left here, which you can see is the implied volatility for S&P 500 options. So if we look at this, we've seen that implied volatility really surge towards the tail end of January and the beginning of February. But actually, in the last couple of weeks, it's come right back down to pretty much not historic lows, but definitely around the trend that we saw at the beginning of the year when things were looking a lot more rosy. But we've seen a couple trends that are quite interesting now that really didn't exist last year. So first of all is that investors are looking to move away from the one-size-fits-all ETF type products, indexing being one of the big themes of last year. So what's really coming into favor are the smaller ETFs, so the likes of that have large exposure to dividends, to have low volatility. So the more niche products that really kind of suit investors' needs as they look to maybe potentially take a different view on the market than everyone else was last year. And finally, the last thing we noticed is there's been a big surge in trading activity. So if we look at the overall European equities volume from our market share analysis product, we saw there was quite a marked jump in trading in the first 6 weeks of last year compared to this year compared to the first 6 weeks of last year. So clearly much more of a stock pickers year, and with people having a much different views on how the market will do moving forward.